Hi, my name is Darren from HCG.tax, and we're the team that seeks to demystify that sometimes confusing world of international tax. And today we have the honor of having another conversation with Jose. Jose, could you please introduce yourself?
Of course. Thank you, Darren. My name is Jose Aguilar Shea, and I have the opportunity and privilege of being here with Darren speaking about international tax, and particularly in Spain, where I'm a tax partner in the Squire Patton Boggs firm.
Fantastic. And you mentioned rental properties. What if someone, they like Spain, they acquire some properties and they set up a separate company in Spain to manage those properties as investment properties, as rentals? And they work as an employee for the company that they've set up separately to manage those rental properties. I mean, potentially at a very high level. Is that an arrangement that could probably pass, or is it too in a gray space?
And I know it's easy for a lawyer to say, right? Depends, right?
Depends,
I've done that for clients, and but again, I mean, it's sometimes, and I don't want to take our value on that, but a lot of things is common sense, right? You're saying, well, there has to be a purpose of moving to Spain. Again, if you ask yourself, you have two rentals, how much work you're going to do in Spain with two rentals, long-term rentals, right? So, and I'm like, is the tax, what's the minimum number? There has to be enough work for that. And again, a lot of questions is, you can't start a business and that's it. It's running. Can I lose money? And I say, I have no concern in that. I mean, there's no precedence because it's there, but you just have to prove that the business is growing. So I've had an Argentinian client come in. They bought 3 so far. They've done 4 offers on houses that were turned down. They've been here a year and a half. So I think it's the history that you have to say. It's not about buying 2. It's about you try to buy 20, you refurnish one, you talk to this guy, you get you contract a management company that is telling you the valuation of that. You talk to the banks for a mortgage. So again, if you want me to put a safe harbor, just to give you an idea, that's what you generally use, even for personal income tax, for residents, for wealth tax exemptions that apply. But it's like we have a special regime on the corporate income tax for companies which have long-term leases, at least 8 properties. So I say, if from a corporate income tax perspective, there's a special tax regime when you have 8 properties rented out in the long run. How could they turn down and say 8 properties is not enough, right? So that's kind of my point that I would set on saying that it's not a safe harbor, but it could be considered as much as possible, okay? So that's something that, again, you have to look on a case-by-case basis and kind of think it through.
Okay, fantastic. Thank you. Jose, if anyone wanted to get in touch with you to follow up on any of the topics that we discussed, what's the best way to find you?
My full profiles in LinkedIn, and also you can find me on the webpage. Just put my name up and Squire Patton Boggs, and you can find full details. So happy to always assist and even for informal conversations.
Fantastic. Thank you.